That smartphone in your pocket is now at the center of an escalating trade war. President Trump's wave of tariffs in early April is sending shockwaves through the stock market, with Apple potentially facing the biggest impact of any tech company. Experts warn iPhone prices could jump 30 to 40% as President Trump's tariffs on Chinese imports take effect.
If the iPhone prices were to jump 30 to 40%, consumers would spend a lot less, they would upgrade a lot less frequently, and that's going to put a huge damper on Apple's profit.
According to Rosenblatt Securities, an iPhone 16 starting at $799 could cost over $1,100, and the iPhone 16 Pro Max starting at $1,599 could cost $2,300 if the tariff cost is passed on to consumers.
It's 100% certain that Apple will pass at least a large portion of these costs on to the consumer. No company in history has ever passed zero onto the consumer, and the reason is because, like all taxes, everyone ends up paying some share of it.
Markets reacted quickly to Trump's tariff announcement. Apple shares tumbled on the news, with much of its production based in China, which is facing some of the toughest tariff increases.
It's really difficult to see what the upside of all of this is.
That's Dave Hebert, a senior research fellow at the American Institute for Economic Research. Now, he says the timing on when Apple products could get more expensive all depends on the tech giant's existing supply and contracts.
The profitability of Apple is going to go down as they eat those costs in the short run. Once those contracts are up and they can be renegotiated, however, those prices are going to be passed on straight to the consumer.
Apple isn't waiting to react. The Wall Street Journal reported on April 7th the company plans to send more iPhones to the US from India instead of China. Apple is expected to make around 25 million iPhones in India this year, 10 million of which are typically sold within India. And according to Bank of America analysts, if Apple sends them all to the US, it could supply about half of America's iPhone demand. While that might soften the blow, Apple's core production remains anchored in China. The short-term workaround is a big deal because iPhones make up 50% of Apple's revenue. And according to Wedbush analyst Dan Ives, Apple is especially vulnerable to Trump's trade policies. In an early April note to investors, he says, "In our view, no US tech company is more negatively impacted by these tariffs than Apple, with 90% of iPhones produced and assembled in China." The White House says these tariffs on China will bring high-tech manufacturing back to American soil. Here's Commerce Secretary Howard Lutnick on CBS.
Army of millions and millions of human beings screwing in little screws to make iPhones. That kind of thing is going to come to America.
Lutnick's point there is exactly what President Trump has been saying, or at least claiming will be the result of tariffs, is that all these manufacturing jobs that have allegedly been lost to free trade will return back to America. That's not to say that we can't put those little screws inside the iPhone. Of course we can. But the cost of doing that is going to be diminished innovation and diminished American leadership at creating the great products that the rest of the world buys from us.
Now, Hebert says moving iPhone production from China into the US isn't just expensive, it's inefficient, and everyone would pay the price.
It is not good for manufacturers, it is not good for the American producer, and it is not good for the American consumer. When it comes to iPhones and Apple products specifically, a lot of their manufacturing takes place in China. This isn't just because the Chinese worker is so much cheaper than the American worker, it's because the American worker is so productive that final assembly is oftentimes just not worth our time.
Dan Ives breaks down the numbers behind a potential massive manufacturing shift from China to the US. Even after Apple's recently announced plans to invest $500 billion in the US over the next 4 years. But that investment is geared towards server production to power Apple Intelligence, among other initiatives. Domestic iPhone production doesn't seem to be covered in the current plan. Ives says the reality is it would take 3 years and $30 billion, in our estimation, to move even 10% of its supply chain from Asia to the US, with major disruption in the process. And Hebert describes the complexity of creating a new manufacturing ecosystem in the US.
This is going to be an absolute logistical nightmare. The chief constraint is the infrastructure to move people, materials, and product from all around the country to the manufacturing plants and then back to retail stores. It means you're going to have to work with local governments, with state governments, and with the federal government, get them all on the same page, which I don't know if you've seen Congress lately, but getting them to agree on anything has been famously difficult.
Hebert, like many consumers, is making practical decisions based on what he sees coming.
I am currently planning on going to the Apple store later on today to buy an Apple TV because I do expect prices to rise. I don't know when it's happening, but I know it's going to happen. And I want to get that price before it actually does happen.
Now, as negotiations between China and the US continue, consumers really might want to think about their next technology purchases carefully. Unless China and the US come to some sort of serious deal, tariffs could soon make that iPhone upgrade much more expensive.